Hey everybody, it's Jack and welcome back to another video. Today's video is going to be yet again another dividend stock video. In today's video specifically, I'll be going over 3 very different dividend stocks that I think are great buys in today's market in June 2021. So like I mentioned, these are going to be 3 completely different dividend stocks in completely different sectors. And what I really like about these stocks is that they share in common is that in today's current market environment, when we're pushing all-time highs across the market and stocks are trading at very rich valuations, the average PE across the S&P 500 is sitting at around 44, which is historically high. So what we're going to focus on in today's video is finding those dividend stocks that are actually trading at very fair valuations today and what I think are actually undervalued, and I'll get into all of those reasons why. So the 3 dividend stocks that I cover in today's video are actually going to be trading below their 5-year average PE ratio, their price to earnings, so the kind of multiple that they're trading at, which can be a signal that they're currently undervalued. These stocks are also all really great dividend growth stocks and have been increasing their dividends each and every year over the past few years at really solid increments. So just by buying these stocks and holding them, you're really going to see that passive income grow over time, which is great to see. So without further ado, let's jump into the video and go over the top dividend stocks today in June 2021. The first dividend stock that I'll be covering in today's video is one of my all-time favorites. It's one that I think is a great investment for any investor out there. Seriously, it is one of Canada's big banks. It's actually TD Bank, ticker symbol TD. And you might be asking yourself, didn't you just say that you're going to be showing us companies that you think are undervalued, but aren't the Canadian banks trading near all-time highs? Yes, they are, but I'll get into the reasons why I think TD is currently undervalued and show you some of the things it has going for it and why it's a great investment even at today's prices. TD Bank currently trades at $87.67 per share at the time of filming this video, and over the past month or so, it's really been consolidating and trading steadily in this $88 to $86 range. TD Bank currently offers a 3.64% dividend yield, so pretty solid dividend yield, and it's on the safe side with its payout ratio being around 40%. And what this means is that TD Bank, out of its net income or profits, gives away 40% of those net profits in the actual dividends that they pay out, and the other 60% goes to growing the business, which is great. Having over 50% go to actually growing the business is allowing TD to really aggressively expand into the United States, and they're actually really growing their market share when it comes to big banks in the US. And this is one of the main reasons I like TD moving forward and why I think it can continue to push all-time highs and grow as a company moving forward in the years to come. Another main reason that I like TD at the current price today and why I think it can continue to push into that $90 and plus per share range is because of its PE ratio. Its price to earnings ratio today is sitting at 11.27, so right around 11.3, which is a great PE ratio, and it's actually the lowest out of all of the big Canadian banks. And TD's historic 5-year average PE ratio is actually sitting around 12 or just above. So it's actually trading well below its 5-year average PE ratio. So in this regards, TD is actually undervalued at the current price. And this is something I really think has going for it, with a lot of the other Canadian banks sitting at all-time high PE ratios, or at least at the higher end of their 5-year average. TD is sitting well below theirs, which again just means it's trading at a great value today, even at the current price. And if we look at TD's 6-month chart, you can just see the kind of continuous growth that TD Bank has been seeing. And the 1 year is the same thing. Coming out of the pandemic, the big banks have really rebounded super well and are now at all-time highs. And if we look at the max chart of TD Bank, you can see the power of just holding this one consistently in your portfolio. Those returns are going to come in share price appreciation, and that's not even counting the dividends that you will collect on a quarterly basis. And not to mention that TD's dividend has an amazing track record of actually growing every single year on an annual basis. TD Bank over the past 20 years or so has been growing its dividend at an annualized rate of around 11.3%. So by holding this stock long term, you're just going to be getting paid more and more each year into your own pocket. So in the last 5 years alone, TD Bank's dividend has grown from 2015 to 2020, 57.45%. Which is the highest out of any of the Canadian banks, and by quite a substantial amount if you check the graph on screen. And this is the main reason why TD Bank is my favorite out of the Canadian banks to buy and hold super long term. The second dividend stock is actually one that I've covered here on the channel previously around a month or two ago, and since then it's actually been doing extremely well. It's up around 25% since I featured it last, and it's one that I currently hold in my own stock portfolio. It is Kirkland Lake Gold, ticker symbol KL. This is one that's been on an absolute tear over the past month or so, like I just said. Kirkland Lake Gold is one of Canada's top gold mining companies, and in being a gold mining company, they're actually a great hedge against inflation because gold itself has been a historic hedge against inflation, and these gold mining companies can actually take advantage of this because if the price of gold raises with inflation, then these miners can actually go ahead and sell the gold that they mine at a much higher profit, which is great for them. And Kirkland Lake Gold is, in my eyes, one of the best gold miners out there. And they've also been increasing their dividend like crazy, which I'll get into. So let's jump into Kirkland Lake Gold. Kirkland Lake Gold is currently trading around $52 per share at the time of filming this video. And it currently offers a smaller dividend yield at 1.79%. So this is slightly more of a kind of growth stock because it does have that smaller dividend yield. However, it has been growing its dividend extremely well over the past few years, which I'll get into later. I featured Kirkland Lake in a video around 2 months ago when it was in the low $40 range. That is when I originally started my own position in the stock. And since then, it's really gone on a tear up into this low $50 range where it's up around 25% from those lows around $40. However, I still think Kirkland Lake Gold has tremendous upside. It's currently consolidated in the low $50 range, kind of between $51 and $53 over the past month or so. And if we look at the 1 year chart, we can see that Kirkland Lake Gold is actually still down quite significantly from when it was trading in the low $70 ranges. So it's still $20 below that share price, even after the recent gains over the past month. And I really do think this stock is going to be able to get back to the $60 plus range over the next little while. And the main reason for this is that Kirkland Lake Gold is exploring and operating mines that are really premium mines, both in Canada and Australia. And the Australia explorations really aren't priced in to Kirkland Lake Gold's current price that it's trading at today. And this is what I really think is going to give it that upside. Not to mention that Kirkland Lake Gold actually has little to no debt, which I think is one of its strongest things that it has going for it, because as we start to see inflation rise, interest rates are probably going to rise as well to help combat inflation. And companies that leverage a lot of debt are going to have harder times paying back those debts. Kirkland Lake Gold currently has a PE ratio sitting around 15.63, which is well below its 5-year average of just above 21, which signifies that Kirkland Lake is trading at a really nice valuation today. And Kirkland Lake Gold has been growing its dividend like crazy over the past few years. Over the past 2 years, its dividend has more than tripled in the actual payout that you receive by holding this stock. So if it is able to keep up this rampant growth in its dividend, you could be collecting a 3-4% dividend in the near future. The third and final dividend stock in today's video is a utilities company. And utilities companies are actually good hedges against inflation as well, because as inflation rises, utilities companies can actually raise the rate at which they charge for their utilities. The utilities company that I'll be going over today is one that I personally own and I think is a king in the dividend growth space. They've been increasing their dividend each and every year at an over 10% rate, and they've also been seeing crazy share price growth over the past 5 to 10 years. So I think there's a great buying opportunity at today's prices. The company in question is Algonquin Power and Utilities, ticker symbol AQN. Algonquin Power and Utilities currently trades around $19.59 per share. It's a dividend stock that offers a 4.26% dividend, so a really nice solid dividend from Algonquin Power. And over the past week, Algonquin Power has actually started to see some really nice upwards momentum in its share price. It was trading below $19 around a week ago, and it's now currently trading around $19.60. So a nice little 3% gain over the past week, which is really nice for Algonquin Power. But even after this upwards momentum, Algonquin Power is still trading, in my eyes, at a really nice price today. As just a few months ago in February, it was actually trading over $22 per share. And since then, it's dropped around 20% to its lows of around $18.50. And just like I mentioned, it's now starting to pick back up in that upwards momentum, because over the years, this has been a really steady and reliable dividend growth stock, you can see that over the past 5 years, it's gone from $11 to $12 range all the way up to where it now is close to $20. And over the max chart, it's the same story. Over the past 10 years, it's super steady, this growth in the upwards direction that you see with Algonquin Power and Utilities. This is a utilities company that is aggressively growing its operations, and it has 33% of its actual utilities in the renewable space. This is one of the key aspects of Algonquin Power and Utilities that I really like as an investor and a shareholder, that it has its core business in regulated utilities, but also has that 33% stake, give or take, in that renewable sector. So you're really going to get that driving growth as the world heads towards more renewable options in the next decade or so, just helping to drive that share price even further. And Algonquin Power and Utilities currently trades at a PE ratio of around 11, which is actually very cheap compared to its 5-year average. The 5-year average PE of Algonquin Power and Utilities is sitting above 21, I believe. And over the years, as Algonquin Power has been growing, its average PE has actually just been going down over time consistently over the past 5 years, which is really nice to see. So it's trading way below its 5-year average price to earnings, and in my eyes is still at a great price today. I think if you can pick up Algonquin Power and Utilities below $19.50, that's a good buy. And anything below $19, if it does dip back down below 19, I think is a really, really good buy. I do want to mention one thing that a lot of people do point out about Algonquin Power and Utilities, and it's the fact that it's leveraging debt to grow the business. Like I said, if interest rates begin to rise, this can be a little bit harder to pay off. However, it is very normal for utilities companies to actually leverage debt, as it is quite expensive to grow the infrastructure for these utilities companies. So you can see that the long-term debt for Algonquin Power and Utilities has been growing over the past 3 to 4 years, which is definitely one thing that you should definitely keep in mind and keep watch of. But if you look at the total assets, you can actually see that the total assets is growing much stronger than the long-term debt is growing, which for me is the clear signal that Algonquin Power and Utilities is using this long-term debt efficiently to grow their operations and their asset pool. And their total assets still greatly outnumbers their total liabilities, almost a 2-to-1 ratio, which is great to see. But I definitely wanted to bring up the long-term debt, so definitely something to keep in mind. And another amazing thing about Algonquin Power is, again, that dividend growth you get with this dividend stock, as it does raise its dividend at an annual basis of around 10%, and it just did so recently about 2 months ago, raising its dividend yet again by that 10% mark. So by holding this stock long term, you're really going to see that passive income just continue to grow over time. So there you have it. Those are my 3 dividend stock picks for the month of June that I think are great buys at today's prices. These are all very different stocks in very different industries, but they all offer that kind of stability and solid fundamental companies that really are trading at below their 5-year historic PE ratios, which can signify that they're currently undervalued based on their previous performances. And they are also all really solid dividend growth stocks, which have just been increasing their dividends each and every year. So these are great ones to buy and hold long term, and really not only see that share price appreciation, but also that dividend growth. So I hope you guys enjoyed this video. If you did, smash that like button and subscribe to the channel. Lots more content coming your way, and it means a lot. I'll see you in the next one.